Good afternoon. Welcome to LBMA webinars. Today we have evolution of central bank gold operations and the lovely Isabelle Strauss-Kahn. She is the non-executive director of LBMA Board, among many other things. And hosting her today is Simon Weeks, the senior advisor of LBMA. We are very happy that you could join us. And if you do have any questions throughout the webinar, please use the question and answer panel at the bottom of your screen. We do hope to answer these at the end of the webinar, though if we don't, we will contact you afterwards. And if you do have any questions which you did not pose during the webinar, you can always email us at ask@lbma.org.uk. So with that, I shall hand over to my speakers.
Thank you, Taylor, and a very good day to everybody. It's good to be having at least some virtual interaction with you all today. We don't often hear a great deal from the central bank community about the makeup of their reserves, and especially so when it comes to how they view precious metals and their impact on reserve allocations. So any opportunity to get a flavour for how they view the world of gold is an exciting one. As such, and as Taylor has said, we would encourage you to post any questions that you might have, and we will do our best to answer them. We're very honoured to have Isabelle Strauss-Kahn with us today, and given her broad-based experience with such esteemed institutions as the BDF, World Bank and the BIS, there are few who are as qualified as her in being able to provide detailed insights into the workings of the central bank sector. I'm therefore very pleased to hand you over to Isabelle for her thoughts on the evolution of central bank gold operations. Isabelle.
Thank you very much, Simon, for your kind introduction. So in terms of the agenda today, I will start with showing, or maybe it will be a reminder for some of you about what are the central bank's gold reserves right now. Then I will turn on why is gold remains a strategic reserve asset for central banks. Then I will go to more detailed operational aspects of central banks' gold reserves in terms of the decision-making process and how gold is integrated in the global strategic asset allocation within central banks. And then turning maybe even more operational on how do central banks buy and sell gold? How do they actively manage their gold portfolio? And I will finish at what are the operational challenges for those operations. But as you know, central banks operate mainly on the OTC market. Therefore, there are no statistics about the operations per se. And as you know, also, central banks are not always very transparent about what they are doing. The only official statistics which exist is actually the IMF SDDS template, where central banks report their gold holdings every month. And unfortunately, not all central banks are subscribe to that template. So in my comments, I will use several surveys. And by the way, it is interesting how many surveys you can find these days about gold and central banks investing into gold. But I will use essentially the World Gold Council survey, the World Bank Treasury RAMP survey, Invesco survey, and also Central Banking Publication Survey. And as Simon said, so I will use the surveys and also my experience among the world of central banks. So the next slide, please. So starting as an introduction, just some facts that we have seen. If you look at the left-hand side graph, you can see a steady increase in gold reserves in central banks. There were, in the last decade, starting with the first quarter of 2010, there were just under 31,000 tons, and now they are 35,000 tons. So you can see this steady increase. On that graph, you can see also what is a percentage of gold out of the total reserves. So you see that the statistic is much more volatile, but however, if you look at the beginning of the decade, it was around 11%, and now it is around 14%. However, I think this statistic is a bit difficult to interpret because you have a lot of valuation effects in this statistic, which can distort the exact landscape. Now looking also on the left-hand side chart, I have plotted actually the net purchases of central banks over the last decade. And you can see also a steady net purchases with a peak, of course, that everybody noted in 2019, where central banks bought more than 600 tons. The surprise effectively was last quarter, the third quarter of 2020, where we could see a net sales of around 12 tons, the first time since the first quarter of 2011. But however, this net sale remains moderate. So does it mean that it is a new trend? Well, I don't believe it, and it could be a topic for discussion. And in my view, actually through the global financial crisis, the sovereign debt crisis, and now COVID, gold has proven its role as a safe haven and strategic reserve asset for central banks. Next slide, please. So indeed, why it is a strategic asset for central banks and what are the main motivations for central banks to hold gold? One first and the obvious reason, or état de fait, is that for 83% of the central banks surveyed, it is a legacy and historical position, and even for 96% of the central banks in developed countries, which is not surprising because all the big holders of gold are in the developed market. However, even if gold holdings can be held for historical reasons, central banks rank their motivations of holding gold when asked about them. And the three main reasons which gather 75% of the responses are: first, gold is a long-term store value. Gold performs well in times of crisis. And third, gold doesn't bear any credit risk. What is interesting also is to look at gold as a diversifier, because it is quoted as a motivation for 40% of the central banks, but there is a discrepancy depending on the group of central banks, meaning that central banks from emerging and developing countries quote that motivations at 72%. Low or negative interest environment, it also quoted around 40%. But inflation hedge, which is one of the reasons why you could hold gold, this argument remains marginal since it is quoted only by 28% of the central banks. But what is interesting also in the surveys is that when you ask central bank how do they see global gold reserves over the next 12 years, 62% they say they will increase. However, if you ask the question, how do you individually see your gold reserves over the next 12 months, only 18% say that they will increase. However, in these surveys, the percentage of central banks saying that they are going to decrease is really minimal, and it's less than 10%. So the next slide, please. So as I said, going a little bit in the more operational side on how gold is managed and processed in central banks, I would just like to highlight first the decision-making process and the strategic asset allocation process. As I said, gold is seen as a strategic reserve asset class, but it is also a political asset. That is why decisions about gold are made at the highest level of the institution, meaning the governor. And it is quite often a discrete decision. But also it is important to notice that gold is an eligible asset in almost all the central bank laws and all investment policies. So since this is a bit of a specific asset in terms of decision-making process, it is also a bit specific in the strategic asset allocation process, because gold is very often treated as a separate tranche and quite often as an investment, kind of investment tranche, and not a liquidity tranche to respond to short-term liquidity needs of the country. And according to the surveys, 62% of the central banks responded that they do not have a targeted allocation for gold. However, the approach is quite diversified, depending on the size of initial gold holdings. And it is true that for the big holders who hold a legacy stock of gold, they are even not looking at what could or should be an optimized allocation for gold. Because if you look at the results of the model, then you would have to sell a lot of your gold. But the smaller holders or the central banks who have started to invest into gold, in particular for the middle income countries, they do declare that they have a target allocation for 50% of them. That explains maybe some of the recent sales when the target is overpassed due to the price increase in the price of gold. Then they can sell in order to go back to the target. However, it seems that gold allocation in total reserves has increased over time. On average, it is now around 4.8% compared to 3.9% in 2016, according to the surveys. However, and if you look at the middle income countries, 63% of them declare having a target allocation between 0 and 9%. So next slide. So how now do more practically, how central banks intervene in the gold market and which kind of instruments they use first for buying or selling gold? According to the World Gold Council survey, 75% of them use actually the OTC GDL bars, and some 7% use the domestic market, meaning buying the domestic production. A use of derivatives remain marginal, if any, and I think I have not seen any central banks using futures for having an exposure to gold, but I don't have also an holistic view, of course, of all the central banks. Turning to ETF, it is true that there are a lot of questions from central banks about ETF. They want to know how it works, what is the liquidity, what is the credit risk. However, till now, there has been no investment in ETFs for gold in central banks. And I think the rule remains a preference for physical gold. Next slide, please. So turning to active management, actually, what does we mean with active management? Because in the central bank's world, active management in general means to manage a portfolio against a benchmark. But with gold, there is no benchmark that they can use. Therefore, active management is seen more by using investment instruments in order to enhance the return on the holdings. And as I said at the beginning, unfortunately, there are no statistics about the usage of these instruments. However, with the different survey, we can see that three main instruments. First one is a straight gold term deposits, be it collateralized or uncollateralized. And it is an instrument that 47% of the central banks say that they use it or they plan to use it. And right now, I don't think that there is a big use of these deposits, of course, because of the very low gold lease rates. And if you do that also, because you could do it on an unallocated basis, there is the issue of credit risk. And most central banks actually use these same instruments on an allocated basis. Another interesting development is about swaps, because 60% of the central banks declare to use them or plan to use them, and actually 36% declare to use them currently. And in swaps can have a double function for the central bank. They can be a source of funding in times of crisis. And I just would like to recall the use of swaps by the Sveriges Bank during the global financial crisis in order to help the domestic banking sector to raise dollar funding they needed, and they couldn't have access to the US market. But swaps can also be used in order to enhance the return on the currency reserves through instruments like FX covered swaps. Futures options, as I think it remain marginal use because only 13% of the central bank surveyed declare to use them. However, as a marginal remark also, I would like to say that options could be interesting in order to complete that, some strategies. And I remember that when I was at the Bank of France and we were selling gold, we used options because we have specific strategies, and it has been quite helpful. But actually using all these instruments needs strong risk, legal, back office, accounting, IT setup at the operational level of the central banks. And this drives me to my last slide. If you can turn to the next one, please. About the operational challenges facing that central banks have to face when they do gold operations. And the first one is the choice of the custodian. And according to the surveys, there are three main custodians that are used currently by central banks: Bank of England, domestic storage, and the BIS. The Fed and other central banks are less used, but they are still used. And that is interesting when it is the gold is stored abroad. In general, central banks store between 75 to 100% of their holdings abroad. The domestic storage is also an interesting maybe development, as it's increased a little bit over the years, and certainly in relation with repatriations of gold holdings by certain central banks and mainly European central banks. The second challenge is some of the central bank's gold holdings are not GDL. So before investing gold, they need to upgrade their stocks. And I know that several central banks have some such upgrading programs running. Another issue which is important is the legal contracts with the custodian, and central banks have to be very cautious, and especially in order to be sure that their assets are properly, the gold is properly segregated, and if they can, which they cannot always, also cash accounts are segregated. The second legal contract, if you want to engage in derivatives, swaps or options or futures, you need an ISDA agreements. And with all the difficulties that some central banks have in order to find a clearing broker. Accounting can also be an issue for central banks because the trend for central banks is to actually adopt IFRS as the best practice. But in IFRS accounting, gold is not considered as a currency, or monetary gold is not recognized. You can register it only as a commodity, which doesn't fit central banks' balance sheet, and that's why they need to adopt other rules for accounting gold. And last, of course, as usual, is IT system, because they need sometimes to have the right IT system to monitor the risk they are taking when investing in gold. So with that, I think I will finish there.
Thank you very much, Isabelle, for that illuminating presentation. Fascinating to hear from somebody who's had such experience as your good self. A few questions that I think are coming in and would like to put to you in no particular order, as they say. You mentioned central bank purchases over an extended period of time, and so far this year, central bank buying is around 220 tons to the end of Q3. But in Q3, central banks have been net sellers so far. The first quarter, in fact, of net sales since 2010. Do you think this indicates that the run, if you like, of purchases is something that's coming to an end, or does it indicate price sensitivity, for example?
Well, I think it's, as I said, I believe that it is not a trend that will net sales will be or in the future. Of course, you will have ups and downs. Maybe the level of net purchases will not be so high, but there remains a lot of uncertainties in the market, even COVID, and so it will be some ups and downs. But I do think that net purchases will still go on. And the issue, if you look at who were the sellers in the Q3, it's well, there are maybe some. It was because of the price, definitely, and some central banks, as I say, when they have a targeted allocation, then with the increase in the price of gold, then they are overpass the target. So in order to go back to the target, they are selling gold. Then you have maybe some specific issue, like for Turkey, how how they will go on in terms of selling gold. Russia is also, as I said, they are not going to continue their buying. So the level is going to be less, but I think you will still have positive positive buyings in the future. But it doesn't mean that in some quarters you may have some net sales.
Understood. So the trend is still in place, but maybe on a slightly more gradual basis.
Yeah.
Okay, thank you. And there's a follow-up from that, the question that's come in on repatriation of gold to national storage facilities. Is that something you think is being driven by its underlying value or by the public in those countries and concerns? Do you think that will also continue? And if that does continue, presumably that will also drain some liquidity from the international marketplace if that gold is effectively taken off market, shall we say?
I think that the repatriation effectively, and the big ones like Germany, were dictated essentially by the public and the worries about the German public and the parliament members, that they were asking, but where is the Bundesbank gold? We don't believe it is there. So it was a political issue. For Germany, if I go, and I think it will not withdraw any liquidity. I don't think they are doing a lot with their in terms of their gold holdings. It's a dormant assets, and they don't manage it actively. We had, I think, Poland and Hungary, but it is again for me just political motivation for that, and I don't see other central banks repatriating so much their gold holdings, okay, except for political reasons.
Okay. Now, I mean, we can't go through this webinar without mentioning COVID, I'm afraid, because it's on everybody's lips all the time. You know, aside from the tragic health consequences of the pandemic, there's clearly going to be huge economic fallout over the next 2 to 5 years and possibly even longer. And given the associated impact on countries' debt burdens, is this likely to be a stimulus for central banks to put their existing reserves to work, as well as possibly adding to them as they already are?
Well, do you mean selling gold part or gold reserves in order to help the reimbursement of the debt?
I don't think it means outright sales. I think it's more a question of the mobilization of reserves through various financial instruments to help fund and to help manage through the financial crisis. At the end of the day, gold is no one else's paper, as it were. And that, is there a role for that in helping stability in terms of countries being able to find economic policies to get out of the economic hole that we're all going to be in?
Well, as I said, gold reserves can be mobilized, and it was done during the global financial crisis, like the example of Sweden, and it can still be, but it will never be a monetary financing, direct monetary financing of the government, because this is an iron rule in most central banks and central banks laws, that you cannot finance the government directly. So you can capitalize on them through swaps in order to give some liquidity to the banking sector, but it will not be used to directly finance a government.
Okay, thank you. Another question here on the price. If you've got your crystal ball to hand, what is your view on the price of gold for next year? Do you see a normalization, whatever that may be, of the gold price?
Yeah, it could be a normalization. I don't see the price of gold going very well below, I would say, if I may, 1,500, but yeah, it's a crystal ball. However, there may be, and we have already seen that, downwards pressure, especially maybe linked to the COVID. If there is a vaccine, then economic activity may rebound, and therefore there may be an impact, and you have seen already in ETFs how that has been outflows. So there may be an impact not coming directly from central banks, but from the other participants in the market. However, what will be interesting to look at is how real interest rates are evolving, because you know that the price of gold is quite negatively correlated with real interest rates, and they are very low. They've been very low, which has been, I think, a support. This may change if it is there is a quicker recovery in so that this also may impact the price of gold if we come back to more normal real and nominal also interest rates, because with a negative interest rate environment, it is true also that cost opportunity of holding gold is favorable for gold right now.
Thank you. You mentioned ETFs a couple of times. Is it a case, do you think, that central banks in general are becoming, shall we say, more adventurous in their trading style? I mean, there's a lot of talk about more use of the derivative markets, for example. ETFs, as you said, as I say, you've mentioned a couple of times. Do you think that is likely to become more to the fore going forward, as opposed to just the traditional deposit activity in the markets?
I think, as I said, there are always a lot of questions about central banks. I was at a conference from central banking, and there were effectively a lot of questions from central banks about ETFs, because it can be a quick way to be exposed to gold if you want to. And I know also that ETFs can be used for other instruments, and I know, for example, central banks using equities ETF to have an exposition on equities. However, ETFs in general are not an eligible investment instrument in the central bank, even laws, or even equities, for example, but gold is an eligible. And before it changes, it may take time, and there are still some concerns, as I said, about liquidity, about credit risk. So it may happen. I don't see it happening very quickly.
So slowly, as I say.
As usual in central banks, you know.
And the percentage of gold as part of central banks' reserves, I mean, traditionally, the West has had much higher percentages versus the Far East, just using a sort of a basic geographical comparison. Do you think the trend of those percentages will continue to fall in the Western world and increase the further east you go, using, as I say, a very general swathe of the world?
Well, I think in the West, well, the big holders, they will stay the same. And as I said, that I just look at some percentages, if even the Bank of France or Germany, percentage of gold in the total reserves. In Bank of France is still 77%. In Bundesbank, it's 73%. If you look at this percentage of the total assets, it's around 9 and 8% for Germany. So These kind of things are going to evolve, but as I said, there are a lot of valuation effects. So the big holders, we have seen in other part of Europe, for example, the Czech Republic buying, and even during COVID, they had they increased their allocation to gold. So in the for the smaller holders right now, and be it in Southeast Asia or Latin America, I think yes, that the percentage allocated to gold may increase a little bit. However, when you look at optimization models, whatever it says, and there were some have been done also by the BIS, and you look at an allocation between, I would say, 5 to 10%. So it may increase. I think there is room for increasing, but saying that it will be more than 10%, maybe 10% is on the high side.
Okay, thank you very much indeed. I think that's answered pretty much everything we've got that's come in directly today. And I think we'll probably hand back to Taylor in a second, but we will be happy, and I think Isabelle certainly will be happy to answer some questions, via the LBMA. And if you want to send those in, we'll do our best to get to them offline, as it were. So thank you very much indeed, Isabelle, for your time this morning and insights into the world of the central bank community. And we'll, with that, thank you for your attendance to everybody, and we'll hand you back to Taylor for some housekeeping. Thank you.
Yeah, thank you very much, Isabelle and Simon, for joining us today. Just as Simon said, please send your questions in, but we do hope that you can join us for our upcoming webinars, and we have 3 final ones for the year. We have an additional webinar to the standard program on Monday at 2 p.m, which is our GDL refiners disclosure guidance, and this will be our compliance and responsible sourcing manager and Benjamin Nenno from Synergy discussing the document and how it should be used. And then on Thursday, we return to our standard schedule for our LBMA Asia update. We have Sunil Kashyap, Jeremy East, Albert Cheng, and Nicholas Rappel. So they'll be discussing the Asian market. And then finally, for our final webinar of the year on the 10th, we have TMO and Brexit. So our Chief Financial Officer, Ed Blight, will be hosting Andrew Tucker from HMRC, Stuart Barton from Deloitte, and Rachel Stirrat from HM Treasury. So we really hope you can join us for those. And we do thank you very much for joining us today. We hope you have a lovely afternoon and a lovely weekend. And that's all from me. So thank you very much.